Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs: the Euro versus US dollar, the sterling versus US dollar, and the dollar versus yen. Today's date is March 12, 2024. Just had CPI data. Came in a little bit higher than expected, but they're already explaining it away. And we're seeing a rebound back in things like the, or move back down in the dollar and yields, and also stock markets moving back to the upside, erasing their losses after the results. So back to normal. We'll see how the day progresses, but we'll talk about the technicals in those currency pairs in this report. So let's get started. Taking a look at the Euro versus US dollar first on the 4-hour chart. The price moved to a new session low as the dollar moved higher initially after the report, and in the process the price moved below the 50% midpoint of the move down from this high right here in December to the low price that we saw in February. That level came in at 1.09165, but the price has since moved back higher. Currently trades at 1.0927-ish type area. So things have retraced back above this barometer for bullish above and bearish below. You can see that more closely on the hourly chart. The price action here and the break below the 50% retracement moved down to, it looks like around just above the 1.09 level, and then rebounded back to the upside. Also in play, taking a look at this hourly chart, is the 100-hour moving average. That level currently comes to 1.0925. And the price is hovering just around that level as we speak. So it may also be a barometer, but I would say that the 50% retracement level is going to be our barometer going forward. If the price can stay above that level, it's more bullish. If the price moves below that level, things shift more to the downside. On the downside, keep in mind this 200-hour moving average. Note that the 200-hour moving average moved above 8 or 9 days ago, and we held above it here and here before moving sharply to the upside. So that is tilting more to the upside, and if the price were to move below that level, it would be more bearish. So that's on the top side for the Euro versus US dollar. If I look at the 4-hour chart again, this swing area, by the way, comes between 1.0924 and 1.09322. Get above the 3.2 level should lead to more upside. Now, it didn't in trading earlier today, but if it does after this number, then we could see further upside momentum with the 61.8% retracement at 1.0969 as the next key target. Let's take a look at the dollar versus yen next on the 4-hour chart. And like the Euro versus US dollars, dollar buying, continued dollar buying actually on the number that took the price back above its 100-day moving average. Now, a little comment about what caused the market to move up earlier today. There were some comments from Finance Minister Suzuki out of Japan and Bank of Japan's Ueda, which sort of put a little cold water on the notion that the Bank of Japan was going to be tightening policy sooner rather than later. The price action last week was sharply to the downside, and as a result, we did actually dip below the 38.2% retracement on the move up from this low right here in December to the high price that we saw in February. But the price action, as you can see from during Friday and Monday's trade was up and down, volatile. And that level comes in at 146.81, and it is now a barometer for bullish above, bearish below. And while we moved higher, and we moved above this swing area up here up to 147.10, and as you can see, the price has actually moved back down toward the high of that swing area right through here after the data, which is interesting. So this area between 146.96 and 147.10 is going to be a level of interim support ahead of the 38.2% retracement. I know it's a minutia, but in a difference between the 38.2 and this level up here. But that's what the price action has been waffling back and forth in narrow trading ranges until the break to the upside and trading here today. So watch this level. If the market does hold, then we'll look toward the 38.2. If we break below 38.2, it could be a signal for sellers to take back more control and push this pair down toward the 200-day moving average. that's what we see, but certainly a point of transition here for the dollar versus yen. But the sellers up here against 100-day, or the buyers up here against a 100-day moving average. A break above that level could not be sustained, and that keeps the sellers in play going forward. And for that pair, let's take a look at the sterling versus US dollar next. And the story about this pair is that the price moved back into this red box in trading after falling yesterday toward the high of this swing area between the 1.2788 and 1.28 level. We saw a little rebound to the upside that tested the high price here. This was the extreme high outside of this red box, but we found willing sellers against that 128.27 level, and the price has since moved up to the downside off of the CPI data. But we're back trading at around the 128.03 level, so just above the 128 level. We gotta get out of the red box and stay out of the red box to keep the buyers more in control, keep them more happy. Moving back into the red box is the opposite, and it disappoints those buyers who look for the break and to stay outside of this area that has defined most of the trading over the last number of weeks, as you can see here. Now, admittedly, the price did move up to the downside below here on a number of different occasions, but this is the value area, folks. Don't deny that. And as long as the price can remain above 128, the bias remains more to the upside. We're currently trading at 128.03. So we'll see if that bullish tilt can continue. My name is Greg Michalowski. Good fortune with your trading. Bye now.